Hey everybody, we're here with Kevin Polakovich from Treadstone Funding. Kevin is one of our favorite lenders and he is outstanding, top in the area. Kevin, I don't know if I actually got a chance to personally say this, but whenever I say, I hear the agents, and I have done recently while they've been on vacation, say, hey, we've got a Kevin doing this loan. The listing agents on the other side rave about you. So thanks
Thanks.
for joining us.
Thanks. It's really nice to hear. It's a big compliment when we hear, hey, our offer was accepted, and they said because the listing agent said it was our pre-approval letter. So 20 years doing this, worked really hard, reputation is everything. We talk about trust. It's earned in drops and lost in buckets. So thanks for saying that, Mark. I appreciate that.
Thought we'd just jump in today and talk a little bit about the craziness that we've been through here the last 6 months, and maybe hear a little bit how you're seeing things on your side of the industry, some things that you guys have done to adjust. We've all made adjustments. Some are going to stick even when we get past this COVID thing, and some are, some won't stick. But how's that been affecting you guys, and what have you guys been doing?
So I'd say a lot of the business is getting back to normal. There was a big knee-jerk reaction early on where lending really tightened up for a couple months. Things are getting back a little bit to normal. What's still not normal is interest rates. Interest rates are at all-time lows right now, which is really exciting. Doing this for 20 years to literally be at a spot for a sustained period of time with really, really low interest rates is exciting. So we're really taking advantage of that. Talking about buying power and what that does for clients right now. You can buy more home. The analogy that I ran just yesterday with someone was a $300,000 purchase for a home, putting 5% down. And I use $300,000 mark because, as you know, that new median price is in that 270 range. So 300,000 for simple math. 5% down buyer a year and a half ago compared to a 5% buyer today, that payment's $300 cheaper per month. So that's a huge number. I mean, that's a car payment. It's crazy what a difference that makes.
Yes, exactly. Money is so cheap right now. It's crazy what that does. And to kind of go along with that, like I mentioned, when these rates get low, these folks who maybe were capped out at 275 or 300 and are keep missing out on these multiple offer situations, but then all of a sudden interest rates are dropping lower. They can afford sometimes to look up in that next price bracket. They can look up to that 310, 315 for the same payment. For the same payment it was 6 months ago for 300. So
yeah, makes a big difference, especially over the long term of the loan as well.
Perfect. So yeah, the couple forecasting things. I mean, I know we get asked a lot of the same questions in real estate world, but on the finance world, the crystal ball questions, election year, any rumors out there going around?
Yeah. The piece I would say, this is the longest sustained period that I've been in that I feel very confident we're going to be low interest rates for the next 3.5 months. I think now, between now and the election, the economy is still super fragile. We're not going to see a lot of big changes to interest rates. I think we're going to see it in the same range where we're at right now. There's not much more room to go much lower. And I say that because we are literally at all-time lows. So I don't think there's much room to go lower. I think if you're looking at making a move, now is the time to do it, knowing that the next several months, what happens beyond the election is really anyone's guess right now, but I feel really good for the next several months where we're at.
That's good to hear. So yeah, the same thing with housing prices. As you are aware, just this past week, actually, we had you guys call in on one for us because it was a 10 offer situation, but that's not gonna, die off anytime soon, which is great for the sellers. Little crazy for the buyers, but we're doing our best to get these offers won, by having a great lender behind us. So yeah, it's the market definitely has bounced back. I would say pretty aggressively from the little bit of a slowdown that we had there in the spring from COVID. Hopefully we get all that stuff sorted out and we keep kind of moving forward. But buyer confidence is high, seller confidence is high. Interest rates are great, so can't complain much here.
A good product to talk about, and just throwing this out there as you reach out to your group, is that we've got a great program right now. It's a bridge loan product. And the bridge loan program is really good for clients who have equity in a home and they want to buy a new house, but they don't want to put their house up for sale and then sell and then be in a spot they have a hard time finding a house. So with clients that have equity, for them to go out, shop, find that new house, get that new house under contract, we can actually use the equity out of their current home as a bridge loan. So if we have any scenarios like that, be happy to talk to clients how to transition equity from the current home to the new home before they sell it. We're doing a lot of those right now.
And how much equity do they need to be able to do something like that? Is there a
great question? General math would be, let's use that same $300,000 number. Let's say someone's been in the house for a long period of time. Maybe they have a $150,000 mortgage left. Their house is worth about $300,000. We'll lend up to 75% of that $300,000. So the $300,000 would be $225,000. They have a $150,000 mortgage. So that means they've got $75,000 that we can use as a bridge loan. And what you do is they can go out and find that next house, get that house under contract, and we can tap into that $75,000, use it as a down payment for the new house. And then when you sell their current house, maybe after they move in, maybe after they get that closet cleaned out, someone's going to come in and say, look at all this room in this closet. You know, it gives you a chance to not only buy the house, but get your house dialed in, get everything cleaned up, get the maximum price, and then sell and pay off your first mortgage at 150, pay off the bridge loan at 75. So we're doing a lot of those right now.
And then is there a one-time refi for the amount that's left on the purchase?
No, it's a bridge loan. It's super inexpensive, very low interest rate. There's no payments during the term of the bridge loan. It just acts as a second mortgage. So in the same way when you sell the house, it pays off the first mortgage for 150. It pays off our bridge loan at 75, and whatever that remaining balance is, they keep to do whatever they want.
Sure, yeah, makes sense. Yeah, that's a
great program.
Okay, well, thanks very much. Like I say, we just like to touch base for a minute and not try to talk your ear off too much, but just kind of get what's going on in the industry, and we'll continue to do this. As always, KP, awesome, great job.
Appreciate the opportunity to work with you guys. I work with 100 different agents around the market, and you guys are professionals, and I appreciate the opportunity, and anyone's lucky to be working with you. So thank you for the opportunity to speak with you again today, Mark.
All right, thanks. Have a good one.
Thanks.